We're back. It's First Call. I'm Chris Vecchio. He's Nick Batista. Welcome. You're watching Tasty Live. We're here with you this Sunday evening as the futures market gets underway. First trades in just a few minutes' time, Nick. 6 Eastern, 5 Central. How was your weekend?
Oh, it was good, man. I mean, we had some fun on the break there. I wish we brought back the pitch, which was like our after hours kind of just like chit chats. That's kind of what that reminded me of. But the weekend was good, man. I mean, Bears got to win 7-3, top of the division. We got to watch the Detroit Lions hopefully lose to the Eagles here in just a moment. But it was a good little weekend. We had 65 and sunny in Chicago. I was out and about walking around. You had Michigan Northwestern playing in Wrigley. I mean, you can't ask for much more than that in the middle of November.
It was a lovely weekend, right?
How
not just the sports.
You're dealing with like diaper disasters? Is that the worst of it, or is there?
Yeah, we had a lovely baby shower in Brooklyn today. And people's apartment was right on the water. The views were Lower Manhattan and the Brooklyn Bridge. Pretty nice. Outside of my price range for sure. So, it was nice to go into the city and have a little brunch, which was good. But what can you do? It's a nice weekend. I have NBA League Pass. And quite frankly, I've been watching a lot of Wembanyama play basketball. I never seen someone who's 7'4" do things that he's doing on the court. But you know what? We got this weekend kicked off with great news, Nick. The tariffs are going away. That's so nice on food, at least for 100 plus goods. You think this is a market that's going to take the news, the baton, and run as we get things started off here?
I don't know. It's been a little bit of Laura, I think we hear you in the background here. So I've been off on this market. I thought that, with the kind of, the recent news events, the FOMC, some of the earnings, I was expecting blast off. Obviously, we haven't had that. Last week, we basically ended the week unchanged. Bitcoin, I thought was going to have a monster move. It has looked like absolute duty. So I've been ice cold. So do I think the tariffs coming off the table is ultimately bullish? I would think so. I mean, I think going into the end of the year, I am bullish in general. But I've been ice cold. My resolve is starting to waver, and that's why I need you on this Sunday afternoon, Chris. I need you to bring me back and give me something good to think about. The tariffs on bananas, it doesn't get the juices flowing here. Okay, I need something more substantial than that.
Banana a day keeps the doctor away, Nick.
I do love a good banana. I'm a big banana guy, banana candies, banana Laffy Taffies. I'm that guy that everybody poo-poos the banana Laffy Taffy. I love that one. That's my favorite one.
Because it's not the bananas that we have today. That banana flavor, sure. I'm going to go on a rabbit hole here, but that banana flavor comes from an extinct variation of bananas that we no longer can produce anywhere on Earth. So that's banana really candies taste different than actually bananas that you consume, like your run-of-the-mill Chiquita banana. Either way, though, Nick, I don't have any good news for you here about Bitcoin because we just wiped out the yearly gains as of this afternoon. Futures market 94,025 here as trading's getting started for this new trading week. S&P off by 0.02%, 6754. NASDAQ barely changed, 25,089. NASDAQ, was flat. Dow Jones up by 0.1% and Russell 0.1%. Quickly over to bonds. You're getting a little bit of a pullback at the long end. Barely changed, though, across the curve. Not sure if it's worth writing home about. Gold and silver taking a further step back after what was a bloodletting Wednesday, Thursday, and even into Friday. Energy markets are a bit softer. Nick, I mean, this is not only just a light market open. I would say that it's a little bit of a soft market open. Sentiment does not seem to have improved after whatever news that we saw over the weekend.
Yeah, and we had Thursday and Friday of last week were rough sessions, but they ended basically inside expected moves. I mean, they were kind of nothing moves in the grand scale of things. And so, it felt like kind of a, you kind of wash some weak hands off the table and proceed on. And, it would have been my thought would have been that we'd have an up open today. Like you had a little bit of volatility. Volatility contracted into the end of the week. You had kind of that washout, that big move to the downside. I think SPX got like 6650 ish at one point on Friday. I think that was around the low. 66.46 was the low on SPX. E-mini is not too far off from there. But it felt like, you had that kind of washout to the downside. It didn't really materialize. And then we kind of bounced right back to that 6,700-ish range. And it felt like, okay, yeah, you got a little bit of pain. A lot of big stocks having some big moves. You look at like a Tesla and an Nvidia. Even Microsoft was like below 500 for a couple days there. It felt like you had like your 3 to 5% pullback, the one that kind of everybody over exaggerates the pain, and then you kind of just bounce right back. It felt like one of those, and so I was kind of expecting it to be a little bit of a stronger open here on Sunday, but and I've said this for pretty much all year, is like Bitcoin's move on Friday and Saturday while the markets are closed dictates, or at least feels like it's a reflection of where the equities are going to be at on Monday. And so today with Bitcoin, getting smacked again, and cryptos in general getting smacked again, it's not a surprise to see a little bit more to the downside here.
What do you make of that? I know there are a lot of correlation traders out there who look to something like Bitcoin as a risk gauge. You've seen gold kind of step into the void, more or less trading tick for tick with stocks over the past few weeks. But gold, Bitcoin, S&P, there's a big divergence there. Two of those three are right near all-time highs. One of them is 20-odd% away. Why is crypto, I don't want to call this another crypto winter because it's not 22. But are you feeling like we're going into that kind of cycle right now? Because this is feeling a little, I have a lot of strong feelings on stocks after doing some more research this past weekend, really getting into the swing of things for work. And I feel like there's a December 2018 allegory to discuss. Ilya's going to love that. Ugh, okay. I can't wait. I can't believe I'm going to make him happy. But like Bitcoin, why Bitcoin? Why crypto? Why this brisk chill in the air right now for these markets?
I think it's a little bit of risk-off sentiment. I think just overall, it has been kind of my gauge over the weekend, just because it's the only thing trading. I think it's kind of taken the sort of prediction market aspect for equities, for big markets. That's kind of what it's felt like in Friday into through Sunday's open. It kind of feels like it's like a proxy for the junkies that need to kind of trade on equities that aren't available in the overnight session. That's kind of what it's felt like. I mean, the rest of the market, the moves in gold and silver in both directions have been crazy. It feels like there's a little bit of uncertainty in all markets as a whole. And so on a day-to-day basis, it's kind of winners and losers are being picked. You have one day where, equities kind of bounce back and are strong and gold's getting killed. The next day, gold is really strong and equities are getting killed. And kind of Bitcoin's kind of in the middle of that realm. It feels like it's very, a little bit of a dispersion, but it's just kind of markets moving towards whatever is moving. It's been like kind of a flavor of the day type markets. You see it in equities as well. One day you have the meme stocks going nuts. The next day you have, the Mag 7 going nuts. The next day it's healthcare or, like Nvidia going from 180 to 190. Like it seems like it's very fast mover type market. It's not like an everything market as we've been used to for the last 6 months, where it's everything in one direction, everything, up, everything down.
Well, you're seeing a lot of volatility come back into the space. I think as we reorient ourselves towards our North Star here on the program, IVR of 32 in the NASDAQ. You can't dismiss the fact that it's now a 60 IVR in Bitcoin, which feels like just a few weeks ago, maybe even 2 weeks ago. We're talking about much higher than that. Ethereum at 14 or so. But there is vol. You can see it in the metals still. You can see it in some of the currencies still. You can see it in the soft ags, at least. Something about the future space. Is the volatility that's being baked in because of the uncertainty over the AI trade? And I feel like we have an important milestone coming up this Wednesday, Nick. Do you know what has a $4.5 trillion market cap with consensus EPS of $1.13 per share due out on Wednesday after the close?
I'd like to take NVIDIA for 500, sir.
Bingo! The price is indeed right. And so what do you make of these NVIDIA earnings? I was looking at the move in the options chain over the weekend, and I see through the end of next week, we're still talking about something in the neighborhood of $13. So at $190, we'll call it a close to a 7% plus or minus move. Does that feel light to you? Does that feel like we should be playing for an inside move? Should we be playing for an outside move? How do you see this week playing out?
I'm positioned for an inside up move, and my resolve is still there for a bullish move into the end of the year. I've told you that it has gotten weaker as the days go by, but I do like the fact that NVIDIA is off of highs here. It makes it a little bit easier to stomach having that long delta. Volatility here hasn't been super high. You've seen. You've seen us go to the low 180s. It bounces right back to 190. It seems like, there's some buying here, or at least there's some dip buying that's been happening. So I think I'm happy with leaning neutral to bullish into NVIDIA earnings. I think if we have a bounce back, it's got to come there. I mean, we have option expiration this week, and then you get into kind of the holiday type season of Thanksgiving, and then Christmas and New Year's obviously later in the year. But it's kind of this has set up as a good 3 to 5% downside move from the highs across the board. Some pain in a lot of the big name stocks. Going into like a holiday low trading, low volume time frame, I'm kind of happy being a little bit long here. Am I silly for that thought?
Of course not, Nick. Nothing that you say is silly, particularly if you're saying get long stocks or stay long stocks. I mean, I think NVIDIA, oh gosh, this is going to be groundbreaking. NVIDIA is the keystone to the rest of the market, Nick.
Of course.
Right? But if we look at a share price that's trading, I mean, we're kind of at a line in the sand here. If Ilya were on, and I know he's in the green room, but I'm going to channel him anyway, looking at this 4-hour chart with a horizontal line, because as Josh knows, Ilya is a horizontal man. You can see here the swing lows on the 11th, the 12th of November, right? You're not punching through there just yet as we make our way through the rebound at the end of the week. And maybe we're capped there heading into this earnings report on Wednesday. But if by Friday we're looking at a 195, a $200 share stock, it's not to say that this market's back in uptrend mode, but it's just difficult to see how bears in the index level then will be able to take the baton and really drive this thing lower than where it is right now. So I guess my view would be the first few days this week, unless something happens, there's some type of catalyst, something out of DC. You get another story about the Fed. I don't know if you saw the story about Alana Kugler over the weekend, the Federal Reserve governor that resigned a few months ago out of the blue. Turns out that she was trading individual stocks, or her husband was. And despite repeated warnings not to do this, the husband just kept trading names like Apple and Amazon. And she tried to get a waiver from Powell to okay, all these trades are grandfathered in. And he's like, no, they're not. So then she resigned instead of showing up to the meeting in July. I mean, anyway, unless there's like something big that comes out. I mean, what's your view? I mean, do you think this market's going to break the Friday lows in either SPX or a NASDAQ before Wednesday?
Well, I think to your point, the short side is you can't do it in the equities as a whole, especially if you're not like super bearish on NVIDIA, because, SPX, NDX, I mean, these are also heavily weighted towards those Mag 7s, even into what has been a lot more pain underneath the surface than what is shown in the indices as a whole. I mean, you look at SPX down a couple percent. It's no big deal. I mean, we ended the week last week, I think up slightly, like it was like a small up week. It felt
0.08% in ES.
It felt like it was Armageddon, and that's not because of the indices. It's because of the single name stocks. Like, we've been talking about NVIDIA. When NVIDIA falls $20 or $25, you feel that. And a lot of people are playing that upside, and that's where the pain is. The pain has been in single name equities. Microsoft is another one where it was quietly below like 500 for the better part of the week. And it's had like, a 5 to 10% down move from highs. I mean, we got as high as like what, 550, and it got into like sub 500. I mean, that's a big move in a single name stock. I mean, like that's where the moves have been and the downside has been. It really hasn't been in the E-minis or the NASDAQ. And I think a lot of that is the dispersion that you're seeing and just the fact that, there's a lot of stuff that has been left for dead that, if it goes up 10 or 15% and is still down like 40% for the year, it's not sexy. Nobody's trading that stuff. But when Nvidia goes down 10% and it's still up 90% for the year, people scream because, the pain is too much to bear. That's kind of how it's felt in the markets, is that we're a skosh off highs in the indices, and then most of these stocks, these big name stocks, are having 2 or 3x that move, but have still had amazing years. It's bifurcated, as the peeps would say.
Before I bring Ilya on, I just want to get one more perspective of yours as we head into next week. You mentioned a lot of these single names, but generally speaking, it feels like the market's become a little bit more skittish. You could look to something publicly available like the CNN Fear and Greed Index, which has been sitting between modest and extreme fear. I prefer to look at something like the AAII Sentiment Survey, which, in absence of any official CFTC data, because the reports have been paused with the government shutdown, we don't have that many positioning numbers to go by. Sure, we have some internal metrics, but that's not necessarily a representative sample. I see now for the week ended November 12th, 49.1% of respondents are expecting lower stock prices over the next 6 months, compared to just 31.6% bulls. This feels like something that is indicative of where we stand. People just don't believe this rally. They think it's a bubble. They think it's overpriced. They don't trust the PE ratios, whatever you want to call it. Do you think that's perhaps the best case that we have for further gains into the end of this year? That no one, or few, not enough, are believers in SPX 7000?
For sure. I mean, both those two facts, the fear and greed being at extreme fear with, a couple percentage points off of all-time highs, and you're sat on what was that? The NIAA? What is it?
The American Association of Individual Investors survey.
I mean, both those have to be contrarian bullish indicators, are they not? Do you not feel that way?
I do. I mean, we've discussed this in other shows here on network before, that when, historically speaking, the AAII swings a certain amount of bearishness over a net 3-month window, you can basically peg the market bottom within a month from there. This is what we were doing we were doing this in September and October 23 when we started fishing for longs. And I got uber long down near 4236 in the S&P 500 right after the non-farm payrolls report in November 23. I remember because it was my best trade of that year, and just rode the futures higher for the rest of the year in both ES and NQ. But it was we're near a washout level in sentiment. We just swung so much in the past 3 months. And historically, this is when bottoms occur, it's time to start fishing. We're not there right now. We haven't seen that net swing to minus 19% over a 3-month window. But we're pretty damn close, because we're at 49.1 minus 31.6. And you're getting into that territory where a little bit more bearishness here. And you could say, all right, time to start thinking about a bottom. And that doesn't make any sense when you're 2 or 3% off the highs. And yet that's exactly what the historical data would suggest. So, Nick, you and I could probably chew on this for forever, because this is confirmation bias. I'm trying to make you feel good. You're trying to make me feel good. You know who won't make either of us feel that good about anything? Our good buddy. Ilya, get on in here. There he is.
Gentlemen,
Mr. Reality check himself.
Entirely too bullish out here.
Throw water on fire here.
I know that you had a great weekend because you're coming in here to counterbalance things out. You're all about the yin and the yang of your life. And so when you have good weekends, you say you have to have very negative weeks. So start your negative week out here on Tasty Live's first call. Why are Nick and I idiots?
Well, I mean, we talked about, just to pick up on what you were just saying about the AAII survey, we talked about this last week, right? Sentiment is a contrarian indicator unless it has turned. At the turns, sentiment is right. And this is sort of the nature of why sentiment, in fact, is a contrarian indicator. It builds as people fight the market, and then when it finally snaps, they are right at that moment. And then sentiment begins to go in the opposite direction, and they begin to even out as they exit their exposure. So I don't know that I would be looking at this particular situation where sentiment is so negative at the highs as necessarily incongruous if maybe this is in fact the breaking point. And NVIDIA this week should be very interesting in that sense, because what have we just seen for the Magnificent Six? The market did not care. That they mostly reported, Meta aside, very well. The market peaked on Fed Day and hasn't looked back since. Mm. And last week was yet another example of, hey, good news. Nope, don't care.
So let's talk this NVIDIA earnings for next week. We touched on it briefly. I'm going to assume that this is one of the top events on your calendar for next week. We do have a non-farm payrolls report coming out on Thursday, which I think is noteworthy and offers.
Is this official now? Do we know this?
The BLS put out their schedule of releases. We're going to get the non-farm payrolls report for September this Thursday. And then interestingly enough, I am so excited for Wednesday, December 10th, because in the morning of Wednesday, December 10th, we're going to get the CPI report. And then we're going to have the Fed meeting later that afternoon. So if the game over the next few weeks is to speculate over whether or not the Fed has enough data to make a determination for a rate cut in December, arguably the most important piece of information will not come out until the morning of the Fed meeting itself. So that 8:31 until 1:59 p.m. trading window is going to be exciting.
It's going to be chaos. And we're going to get the FOMC minutes this week, which will be interesting because, of course, that top that we've had in stocks, that's the meeting where everything seemed like it was going to be fine. The statement came out. They did the cut. The statement grumbled about the lack of data, but not in a way that the markets thought, oh, no, this is bad and uncertain. And then Powell came out. And before he even took questions, told him, so you know how you have this inevitability priced in on the December cut? Yeah, no. And then they asked him immediately about it, and he goes, I want you to listen very carefully to what I'm saying to you here. No. And really pressed the point. And that was the top. So what came out in those conversations, to what extent Stephen Mirren set off this poor guy and badgered him in that meeting about cuts, we're maybe going to find out on Wednesday and what that means. So lots of interesting stage setting here. On Wednesday, NVIDIA and the FOMC minutes, and then Thursday going into Friday, at least one decent growth indicator, the S&P Global PMI numbers. At least we'll get a sensible, continuous data set that's going to tell us something about where the business cycle actually is.
And Nick, you and I haven't covered the fact that we're going to be talking about non-farm payrolls data on Thursday morning. We're going to have NVIDIA, obviously, Wednesday afternoon after the close. Just knowing that we basically have these two major macro events back-to-back, bookending inactive market hours. 4:20 Eastern is after cash equities close. 8:30 a.m. Eastern is before cash equities open. Thinking about those two risks arriving at a time when maybe some folks would not be trading and liquidity is thinner, how do you plan on that kind of macro risk when you're sizing up your positions this week or thinking about a duration scale for some of your trades?
It sounds like a vol crush Friday into the holiday. That's what it sounds like. It feels like that'll keep volatility bid a little bit through the middle of the week with both events coming up. And ideally you see kind of status quo, which has been kind of what has happened. I guess, the change in the rate projection has been out of bounds to what the market was projecting. You obviously had it go from, basically baked into now a 50-50 shot in terms of a rate cut. But yeah, I mean, I think it'll keep volatility bid through the end of the week, and that's, those two things are going to drive the rest of the next couple weeks on what is a light week, couple weeks coming up, holidays, all that good stuff.
Yeah, Nick brings up an important point there, Ilya. It can't ignore the fact that the stock market declined basically in a straight line, as did gold and silver, and really Bitcoin too.
Yeah.
As Fed cut odds over the past month now have receded from near, and we can just go to the current here for this real quick. Where were we a month ago? 88.2% chance of a 25 basis point rate cut.
Down.
Yeah, and that was, a few days ago, if you looked at this, it would have been like 92, 93%.
Yeah. It got almost to 95, 96 at one point.
Right. So Nick, to his credit, he says this is basically locked, basically priced in fully, not just in terms of the historical sense, but like the market moved the SR3 contracts to a point where you could say it's almost 100% priced in.
Yeah.
Now we're at 46%. Is this a fact that we don't have any data clarity right now, or is it because something else is going on? Do you have the same view? I mean, are you looking for vol crush by Friday, or do you have different machinations for how NVIDIA earnings and non-farm payrolls could impact the market this week?
For me, it's event risk that the market is waiting to get on the other side of. Obviously, I think the FOMC minutes are going to be very, very interesting because clearly whatever has happened to flip the switch to risk off was the Fed. And in my mind, the markets were going into that week because that was the same week that Donald Trump was supposed to meet Xi, and they were going to walk back all of this tit for tat. And of course, over the weekend, Bessent met with the Chinese delegation in Malaysia and hashed everything out ahead of time. So we had that nice big gap higher at the open of that week. We were sailing into it. The Fed was going to cut. It was all good. And the markets were basically as priced for perfection as you could imagine. There was no news that you could see. I mean, obviously, something can always come out of left field, but there was nothing you could see of the major sort of stories that wasn't already, this is going to be fine in the eyes of the market. And this is why the good tech earnings, Meta aside, ultimately didn't move anything. It's why when the Trump Xi thing happened, it was like, okay, well, yeah, we know that was already pre-announced. None of it really ruffled anything. But when the Fed took away the inevitability of December's cut, that was the puncture in the pricing for perfection. That was where the market went, wait, hang on. This is not on our bingo card. What? No. And so in my mind, that's been the sort of lingering issue for markets. They want this easing. And we're going to find out, obviously, from the FOMC minutes to some extent. And NVIDIA, I think, is going to be the most interesting in its passing. Will the markets do what they did with all the other earnings releases, again, Meta aside, and basically say, right, whatever, this is fine. This is another, let's say, 4 or 5% beat. That's a normal cadence now for NVIDIA. La-di-da, the Fed's not going to cut. Oh, no. And if they shrug that off and we can't find a bottom on this, if basically the passing of NVIDIA just ends up looking like, okay, we're on the other side of this event risk, sell, then we'll get a good sense of where sentiment is. And I'm getting the sense that sentiment is turning.
Nick, before we talk about how we're positioning ahead of next week as we get into the final 5 minutes of first call here, want to get your take on two earnings releases that we haven't discussed yet. On Tuesday, before the opening bell, Home Depot will come out. They have a $366 billion market cap, so that obviously catches my attention. And then likewise, on Thursday, you have Walmart coming out before the bell, and they have a $817 billion market cap. So not our Mag 7 names, but names that are very much consumer facing. I see Walmart with a near 39 IVR, at Home Depot with a near 36. Are either of these worthwhile for trading this week? If you are going to trade the earnings releases, how do you plan on approaching them?
Home Depot near Lowe's. I mean, I guess that's interesting. It's not one that I typically trade. I am long Walmart a little bit here, as well as Costco, which doesn't have earnings, but in that same sort of realm. They're not occupying my brain space this week. It's mostly about Nvidia and the Mag 7s. I think if you're bullish, you've gotten the opportunity to buy lower on a lot of these names. Ilya mentioned Meta. I mean, Meta at 600, that's a year's worth of gains, or 8 months worth of gains evaporating in a month. And I think a lot of people get caught up in trying to time the bottom, or this is going lower or whatever. These stocks, you've been waiting to buy dips, and a lot of them have had dips, and that's kind of what I'm looking at here. But I agree with Ilya. I think the sentiment has waned a little bit. It's gotten a little bit sour. I'm hoping that Nvidia and the FOMC meeting kind of flipped the script on that for my position's sake.
So speaking of your position's sake, we're going into next week. What are your two positions that you feel best about, and then ultimately that you feel like you need to spend some time managing? So best position, worst position, most confident, least confident for the next week.
I like my Nvidia position upside to around 200. I think it's a inside up move. I'm playing that with call diagonal spreads and out of the money short puts. If you want to play both sides and do strangles, I certainly think that's on the table as well here, but I'm playing it inside and up. And I think it comes with a vol crush. Like, I think a lot of these earnings announcements, when you think about AMD and, besides Meta really being the one big outside move, they've all been kind of buy the rumor, sell the news type events, but they've been mostly vol crush events. A lot of these stocks, just volatility, just getting absolutely smoked. So I think Nvidia is a small upside move. I think everybody realizes that, there's no big issue here. And, you get a little bit of a bounce and a vol crush. And I think that's perfect for anybody trading any sort of short premium in Nvidia.
Oh yeah, same thing. What trade do you have the most confidence in this week, and which is the one that you are most worried about?
Most confidence, probably the Bitcoin short that I have on. I'm doing it through IBIT, through put verticals. It seems to not have any kind of resistance on the way down, even though sentiment elsewhere is holding up for now and is kind of begrudgingly trying to fight the downward push. So if the market wants to tell me that it's going down and with this level of conviction, great, let's go. And least conviction, probably, I flipped long pound and euro last week because they clearly seem to be making an attempt at bottoming. I don't love either of those. I'm still long the dollar against the yen. That one hasn't turned. I think the dollar is in the midst of a larger reversal. I'm always going to trade with the price action. So if it's turning, then okay, then so it goes. I'm going to go where the price action's going. But I don't love those ideas.
My best idea for next week is probably still crude, because this thing just isn't doing anything and is staying pinned near 59.60.
Still a little short there too.
Yeah, I mean, like I just like playing for the sideways chop. I do feel like if it's going to go directional, probably down more than up. The trade that I'm least confident in, boy, did I get in a little too early to buy that dip in silver and double down, because this that is that looks like maybe there's a double top coming together, and that's a longer term problem. But for the folks who did get into the measured move for 52, at least we got there first before the pullback. So hopefully some took profits, whereas I just decided to add in, and now I'm grinning and bearing it. So crude best, silver, gold, I guess would be worst, least comfortable right now. But you know what? We're done here. Nick, programming resumes 2:30 Eastern, 1:30 Central with our team over in London. You're back, of course, with, well, the Batmen are here Monday morning, 8 a.m. Eastern, 7 Central to kick things off. Ilya and I will see you tomorrow, of course, over the course of the day as well. So with that said, we're running late. Thank you for your time. Thanks for watching. Good luck trading. You've been watching Tasty Live. See you tomorrow.